Hey guys, Marcel LeBlanc here, Certified Financial Planner, and today I want to talk to you guys about the tax-free savings account. Now, the first thing that's important to consider when it comes to the tax-free savings account is that it is, in fact, just another savings vehicle for Canadians to use, kind of like the RSP. They both have different rules, but in essence, they're the same kind of account for you, the individual. They're accounts that you can put money aside in. You can choose how your money is invested underneath them, within them, and they're intended for long-term savings because so they give preferential tax treatment in order to give you an incentive to save for your retirement. The same with the RSP. The RSP, you get a tax deduction for the money, and your money grows tax-free until you take it out. Great for retirement. The tax-free savings account is a lot of the same, where you put your money in there, you don't get a tax receipt, but all your growth, all your interest going forward, it will be tax-free forever. And when you take the money out, you don't get taxed like you would on an RSP. So, the tax-free savings account. Unlike what most people think, a lot of people think it's just a different savings account provided by their bank with a better interest rate. That's not the case. You can have a tax-free investment account, a tax-free stock account, a tax-free anything. You could hold whatever you want under your tax-free savings account to make your money grow, which is great because the more growth you make, the more tax you save on your growth. Now, the other thing a lot of people have some kind of confusion around the tax-free savings account is how much can I actually put in there? Can I only put $5,000 every year? It's actually $5,000 cumulative since 2009, as long as you had a social insurance number and were 18 in 2009. So it's 5 plus 5 plus 5. In the last 2 years, it's been $5,500. So right now, if you haven't put anything in your tax-free savings account, January 1st of 2014, you could have put $31,000 in your tax-free savings account, assuming you were 18 when they first introduced it. Now, the other thing that's interesting with the tax-free savings account is it's cumulative, so you build your room as you go, but if you're at your maximum, if you're way under your maximum, if you have $5,000 in there, you can take it out and put it right back in 6 months later, it doesn't matter. But if you're at your maximum and you take some money out, you can't put it back in the same calendar year. You have to wait till January 1st of next year, in which case you'll be able to put back what you took out, plus your new $5,500. So let's take the example of I filled up my tax-free savings account, let's say January 1st, $31,000. And it grows to $35,000 because of my investment decisions. And I want to take out that $35,000. I cannot put it back until January 1st next year. And January 1st next year, everything is reset, and I can put my $35,000 plus my $5,500. So I can put $40,500 January 1st, 2015. If I fill it up and it's my $31,000 drops to $28,000. Now I take out the $28,000 to renovate my house. January 1st of next year, I can only put back the 28, not the 31. I can only put back the 28 that I took out plus my new $5,500. So I can put $33,500. So your gains as well as your losses in the tax-free savings account, if you take them out, follow. It's like they're frozen there, right? They don't care that the limit was 31,000. It was 31, it grew to something or lost to something. When you take it out, that's when the amount is frozen as far as how much you can put back the next year. Now, the huge advantage with the tax-free savings account is your growth never gets taxed. So all your interest, all your gains, you get to keep tax-free forever. So if you have any more questions about the tax-free savings account or savings vehicles in general, visit marcelleblanc.ca, and remember, my advice is free and it always will be. Cheers, guys.